Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent. So what are you seeing this morning, my friend?
And yeah, today we'll go over the pre-market report, jump to the unusual option volume report that we started last week. We didn't get through all the way, so I'll just continue on that report because I do get questions regarding that, the unusual options volume. If you guys have any questions, you can put those questions on the live chat on YouTube. If you want to come on a show and ask your question live, we also put out a link to Zoom. Click on that link, takes you over to Zoom. Once you get to Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we see it, you could come on a show, ask your question live. Everybody will be able to hear it. Those are two ways to ask questions. And while we're waiting for questions to come on, we'll start with the pre-market report. Stop me if any questions come in. If we don't have questions, I'll just continue on to the unusual option volume report.
Excellent.
All right, so pre-market trading, these are stocks trading at pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Here I see 27 stocks, 27 stocks made our percentage gainers list, 54 in the decliners. So right now, from that perspective, we're looking like a more bearish bias at the open. I'm going to filter out this list to S&P 500 stocks. We'll take out any low cap stocks, ETFs, leverage products, closed-end funds, preferreds, all those. Let's remove them just to focus on what's going on in the S&P 500 companies. And to do that, I'm going to use this filter here in ETF, drop it down. And I have a list of ETFs. I'm going to select SPY, which is the S&P 500 ETF. And the list below will get filtered by the holdings in SPY. So here we see 5 stocks made our percentage gainers list, 9 on our decliners. Not a huge list, but it is a little bit more negative or bearish bias at the open. And Friday, what we had, like a pretty bad day, a rough day in the market, Will. And a couple things I'm noticing over the weekend. I think, what are mortgage rates now? We're close to 7%.
Close to 7%.
Close to 7%. They're ticking up. The Fed continues to roll off the treasuries, the mortgage-backed securities. So we're seeing a little bit less liquidity now in those longer dated maturity bonds. Some other players usually that participate in the bond purchases are also backing off. Foreign entities, bankers, big banks, they're backing off a little bit as well. So we are seeing right now less buyers than usual, not just from the Fed, but we are seeing other players backing off on those purchases. And that's why mortgage rates, right, mortgage-backed securities, not a lot of buyers. They're starting to climb. They're close to I think 7%. I don't know if we hit 7% or we're close to it, but it was edging up near there. And I think one thing that, Rob, let me go to SPY. Before we go to the unusual option volume, let's go to SPY. Rob emailed me last week that raising interest rates also can have an inflationary impact. The point was, well, let's say you You raise interest rates. Well, if you raise interest rates, it costs companies more to borrow. If they need to, if they could take that expense and push it out to their customers, then at the end the customers end up paying more, which has some truth to it, because we could see that in the housing market that it's slowed down and prices perhaps are not increasing. The price of homes are not increasing, but the cost of financing a purchase has increased dramatically, 50%. So even though you are paying perhaps the same price for the house as you did 6 months ago, the cost in that 6 months has increased dramatically. If you're going out there getting a mortgage, you might be paying 50% more. And the opportunity cost has gone up, because now if you're paying for it in cash, you could say, well, I have cash in the bank, and to me it doesn't matter, I'm paying the same price. But that cash in the bank today should be earning you more income than it did 6 months ago or a year ago, because those interest rates have been going up. So it might not be reflected yet in the saving deposits, but certainly if you go out there and try to buy treasuries, those are paying much more. I think the 2 years paying over 4.2% now, and I think anything between 3 months and a year, you could get it in the high threes. So those are, I guess the point, saying that even with higher interest rates, there is some inflation embedded in there, especially if maybe the manufacturer or whatever can pass it along. And we are seeing some weakness now, I think, in the car sales. I think used cars have been coming down, and we might not be seeing weakness in prices in the house, but we are seeing weakness in the sales. So the activity has been slowing down dramatically. And this isn't going to be an easy fight with inflation. Some people think the perception is that, well, the Fed has these magic tools that they could just, bring up interest rates to a point, every inflation is corrected, and then we're going back down with interest rates. But it might not be that easy. It's not going to be a very easy battle with inflation that, it's going to get resolved that quickly. And it all depends on how people's expectations, how they start to move money around. You could see it in the housing market. Housing prices are not coming down. There are a lot of reasons for that. People who bought their homes have locked in much lower interest rates for 30 years. So they cannot, and they cannot sell their house and take that low interest rates with them, right? So even selling the home and moving, that will, for this, even if they sell their home, move and buy a home for the same price, now they're rolling up into a higher mortgage, which then adds to their costs, right? So nobody's rolling up, right? They call it like you're locked in. Another thing besides mortgage rates going up, we're talking about deglobalization, the impact of inflation with deglobalization, where in globalization, there was a lot of benefits from it because we were able to move capital and goods across the world more efficiently, which brings down prices, right, on goods, especially like we've seen from places like China. And not only have we peaked there, but I think since the Ukraine war, what we're starting to see is actually going in reverse. And if you guys have been following over the weekend, I was reading how now we imposed a ban on some of the semiconductor technology that we export to China. And if you're listening to China's reaction, we're almost, I would say, like we're entering in a trade war or an economic war with China. Slowly, we just keep going, pushing. And it's not, excuse me, not just with Russia, but now with China. Um, and those are hitting the semiconductor industry. You know, how that's going to play out, because now, you know, like we said, we're decoupling, you know, deglobalization. How's that going to impact the battle against inflation? So there are a lot of things going on right now that I don't think it's going to be as easy as some people are forecasting, where just inflation comes down and maybe they will be able to do it, but they might be stuck with how low they could go with interest rates. And we might be looking at an interest rate that what they call a terminal rate, you know, where they have to stop and hold it, may be higher than a lot of people expect. Another thing wanted to show you guys, that here's the SPY, S&P 500, and these are the stocks that make up the SPY, right? There's a bunch of them in here, and right now it's sorted by the ones with heavily weighted. Apple, Microsoft, Amazon, Tesla, Google. There's a lot of concentration of invested dollars in these top stocks. Here, just in the S&P 500, if you add these weights up, you could see that it doesn't take you very long to get up to 20%, right? I don't know, you can probably look over here, the top two, Apple, Microsoft, let's say that's what, like 13%, 14% almost. Let's say 13%, just the top two. Then you add in Amazon, Tesla. A lot of invested dollars are concentrated in those top tier stocks, which what will happen, you know, that they're very sensitive to a lot of changes going on. Deglobalization, regulation right now, even the tax laws are changing. I don't know if you guys noticed that. What was that? The new tax law called the Inflation Reduction Act.
Yeah, well, it was Inflation Reduction Act, and they added 85,000 new IRS agents. I don't know what.
Right, and within that, there are new tax rules, particularly, I think, that will be aimed at companies like this. I think there's a new corporate minimum tax of 15%, and that could go higher, right? So now all these tax loopholes and stuff, they're going to be required to pay at least 15% on their taxes. I think stock buybacks now are taxed. So we're introducing new taxes, you know, brand new taxes, brand new laws. I don't know how it will impact the bottom line in earnings yet. I don't know how it will impact their behavior, but it's certainly going in the way where, you know, that these top tier companies, they are being, you know, very vulnerable to some of the changes that are going on. And we'll see how they'll impact, but you could see just, you know, you could count on like two hands the companies that make up such a big portion of the S&P 500. And I think Apple are they coming out with earnings soon? I know a lot.
Yeah, well, it's the start of earnings season on Friday. Well, their earnings happening all the time, right? But when they start really talking about earnings season on CNBC and other news networks, with the banks starting this Friday.
Yep. So we'll see. And I think the big question now is, you know, what the impact is on earnings growth, profit margins. Are they going to get squeezed? Is there going to be profit margin compression because we got inflation, higher cost of capital, all this stuff right now? coming in, what will be the impact? Those are going to be the big questions, and not so much how they performed this quarter. We're going to listen closely what they're saying going forward, right? What are the CEOs, the management, what are they seeing going forward? What kind of guidance are they going to be giving to investors? So that will be very important. If there are no questions, I guess, well, then I'll go to the unusual option volume report.
Yeah, let's go over. Just so you know, October 27th is the Apple earnings.
October 27th. So
The 17th.
So in a couple, right, in like a little bit over 2 weeks. And that will be the big one. You could see almost 7% of the S&P 500. A lot of invested dollars have gone into that one company. And, I could go show you, but not it's the earnings yield isn't great in there. There's not great dividend yields, and a lot of the expectation is that it's going to continue to grow, right, at a pretty quick pace. This is the unusual option volume report. We started out going over this last week. I'll just quickly kind of go through what these line items are. Here we have the symbol, Tesla stock. This is the volume on Friday. This is its average daily volume. So if we compare the volume on Friday versus average daily volume, we see that's 2 times its average daily. That's why it made our unusual volume list. When you have unusual volume, options are, it's not one trade, and it's not the same thing as just stock volume, because what's going on in the options? There are puts, there are calls, there are spreads. People can buy options, they could sell options, they could do it in short dated, they could do it in long dated. So just that number alone will point out to that there's a lot trading. But to figure out what's going on, you got to dig in deeper to see where the order flow's going. And we did create a report, and this one here kind of summarizes on the top level, do we interpret the end user, the way they're entering the order, as more bullish or bearish? So here in Tesla, we picked up, if we took the net delta of the trades and we looked at it from the perspective of the end user. So the end user would be somebody entering in the order from their broker, and the other side would be the liquidity provider or the market maker who's facilitating the trades and balancing their books. So our interpretation was that there was more bearish than bullish on Friday in Tesla for a net of negative 3.4 million deltas. This is the change on a day in Tesla stock. Their next earnings, October 19th. So you can see they are coming up with earnings soon, and it could be a pickup in volume heading into those earnings. So an event can explain the reason why there is a pickup in option volume, because an event could make a stock, could be a binary event, makes the stock move at a bit higher volatility. Next to it, we see implied volatility. This is the 30-day IV, 30-day constant maturity at 69. It was up 3% on the day, and its percentile rank is 80%, meaning that we're using an index, 30-day constant maturity at the money. We're looking at the observations end of day every day for the last 252 days. 80 percentile rank means that 80% of the observations in the last 252 days were below the current level. And some of it can be explained because we are coming up with earnings, right? So if earnings are coming up in less than 2 weeks at this point, that option premiums are going up, and you probably will have more activity in that stock. I did have another question with IV percent rank. So let me see if I could, I'll come back to it, but let's go under implied vol ranking here. So this is a different report, just ranking implied volatility. When you rank it, there isn't really one way to do it. It's really what you're benchmarking against, the number of days or months or years you want to look back. And those, so to get a ranking, you stick to some kind of measurement, some kind of system. So I'll give you an example here in AEHR. Right now, we're benchmarking 30-day constant maturity, right? So what is 30-day constant maturity? When implied volatility comes from option prices. So there is no implied volatility, stock that exists, right? It's not like a stock where you could buy it and sell it. There's a price that exists and you could own a stock, right? Implied volatility is a derived value from option prices, okay? And that derived value, which option do you pick? Because there are different expirations, different strikes, and to follow benchmark, you kind of have to standardize it, right? You have to follow something that is kind of equal from day to day. So 30-day constant maturity is an index that looks at an option that has 30 days to expire, right? 30 calendar days to expiration. And since one doesn't exist every day, we can't observe one, we'd have to come up with a calculation, a weighted average calculation between that two expirations that straddle 30 days. We also have a weighted average of at the money options. So it's a methodology, you come up with an index. So that's what this is, the 30-day IB 90.9. This is the change on a day. So it's down 14%. And to measure if it's high or low, we could benchmark, we could compare it, right? We'll have to do a relative comparison. And one way we could do, one method is we could look at the actual volatility of the stock. So here's 20 days. Last 20 days, the volatility of the stock, it moved at 91.2. So you could see that if we compare the implied volatility versus the most recent 20 days, they're very close, right? So this is where it kind of moved in the last 20 days. We could go back longer in history and look at the 1-year volatility. So this is the actual volatility of the underlying stock. And it moved at a 97.5 volatility. So if we took the 1-year volatility and compared it to the implied volatility, so this is remember, implied volatility is the market's forecast going forward. The historical volatility is how the stock the volatility actually moved that in, on a 1-year or 20-day period in these situations. So here we see that versus the 1 year, we're a little bit below that, 7 clicks below. We could also compare the implied volatility versus itself. Where does the implied volatility tend to trade? So the one I showed you before, IV percentile rank, that looks at all the 252-day observations. So it looks at all 252 days for the last year. And then it looks at what percentage of those days did the implied volatility trade below the current level. So 24%, right? So 76% of the time it was above, 24% below. Another measure people like to look at is where is it relative to the high low point? So you're only looking at 2 points instead of 252. So this will say, what's the lowest it traded in the last 252 and what's the highest level and what percentage of the way is it from the low to the high, right? So that's 28% of the way. Here, if it's above the high, so you can see here 84% for this one, BKD, it was up 72% relative to historical. Let me see if I can see. By clicking on it, we'll go to the chart. So you can see here, that's the highest it's been in the last 252 days. So pop a lot over here. That's now at the highest level it's been in the last 252 days. That's why it's 149, basically 50% higher than it was relative to the previous high. So I think those were the questions I was getting regarding.
Yeah, we did have one question relative to the unusual option report. It was Rob was asking, I'm still a bit confused with the sentiment indicator. I guess that bullish bearish sentiment indicator. Is it lagging or predictive indicator or something else? I know there's only about 4 minutes left. I don't know if that's something we want to touch on tomorrow, go through it, or.
Right. So, and we, you know, we discussed this a lot with regarding what, you know, what does the sentiment represent? The sentiment, remember, it's an interpretation of trades that already happened, right? So it's not a prediction of what is going to happen in the future, right? We don't know what's going to happen in the future. There's no way of, there is no such indicator, right? If there's an indicator that told you, you know, tomorrow the stock will be at 3,000 or 0, you know, that would be great because then there's really no risk, right? So it's not a prediction of what will happen in the future. It's showing you how or what are the trades coming in right now in the, you know, today, how they're coming in, you know, are they coming in more bullish or bearish, and what's the imbalance? So it gives you an idea how traders are feeling at the moment. Okay, that's where the sentiment is coming from. So here you can see in Tesla, it just kept building up more bearish and bearish and bearish. So going through it, you're trying to understand, you know, how are people betting? Because if I'm looking at the options chain, here's the options chain in Tesla. All I do is have a bunch of markets. So here's a bunch of different expirations, right? I have calls, I have puts, and I have volume everywhere. I mean, you could see here in Tesla, there's volume on all different types of calls, puts, different strikes, different expirations, right? So it's all over the place. And how do I get a sense of, in general, what are people doing? And I can't even do this by hand, right? Even looking at it, or there's no way to do it by hand. So you have to have some kind of an aggregator, an interpreter to help you try to figure out what's going on, right? And you know, that's why we use implied volatility. And implied volatility is one metric to let you know kind of, well, what do we think is going on with premiums? Are premiums going up or premiums going down? So we've taken it a little bit further with the order sentiment. And what we're doing is, instead of just the implied volatility, because we just talked about implied volatility, that's letting us know if option premiums are in the high end or low end, you know, relative to certain benchmarks. But that's not the only way to look at options, right? You could look at options like we talked about. What are people doing on long dated, short dated, skew, at the money? Look, you know, are they coming in with going long deltas, short deltas? Are they buying gamma? Are they selling gamma? There's a lot of stuff going on that is not reflective in just the implied volatility. The implied volatility is probably the most common benchmark that you will hear And the reason the industry kind of sticks to it is because you only have one benchmark to look at, right? So it's easy. Once you explain it, it's easy for people just to kind of look at it alone, but it doesn't tell you a complete picture, right? That it tells you just a very small piece of information and detail. But what's going around. It doesn't really explain to you the volume of the trades, where it's coming from. Are these, for example, coming from small retail, or is it coming from institution? Is it mostly in the short dated options, long dated options? And that's what this report is starting to break it down. Are there more put sellers, more call sellers? That's what this report is trying to do, is paint you a broader picture of the order flow.
Good stuff, D.
Makes sense. Yep. Well, we're ready at 9:32. I guess
Yep.
I'll let you guys go. Yeah. So everybody, stay safe out there. Have a great trading day. Hope to see you guys tomorrow. We're also doing a webinar tomorrow with Interactive Brokers on the options chain. So we'll be going over features on the options chain tomorrow at 2 o'clock. And for that, you have to register with Interactive Brokers. They're hosting it. It'll be through their webinar system. That's tomorrow at 2 o'clock.
And I will put that in the chat on YouTube. Awesome job, D. Thanks so much, my friend.
Awesome. Thanks everyone for joining. Again, stay safe out there. Have a great